guys, it is December 15th, and today I'm going to be reviewing Coinbase. It's raining here in Florida, so I'm indoors in the Florida room, which always looks a little awkward, I think, as a backdrop, but hopefully you guys will be with me. We're going to go through retail sales, set up the macro, and then we'll just hop right to it. I will say that crypto is not my focus area of expertise, although I have done some consulting projects with firms before, so I'm not crypto ignorant. There is a lot in crypto that is really what I think is the most problematic thing about understanding anything in crypto is that even though that thing does in fact exist in another asset class or whatever it might be, they just plain flat out call it something different. And because most of the time you're talking to someone who isn't from finance proper, like they'll use words in ways that are really truly unique and different to anything that makes any sense. Whereas like an equities person, a fixed income person can still find a happy medium to talk to. You literally have to learn the language and then translate it to what would ever make sense. And I think that's an area where crypto as a community needs to work on it. I think that in the early days, a lot of crypto thought it would be great for them to be sounding very, very different. But now it's really harming them more than anything else. And we'll kind of get to that, and I'll give you more examples then. But let's set up with what's going on in the market today. Market's very red right now. And I mean, if you think about it, people are going home for the holidays, and all we're hearing is people being murdered in Idaho and this FTX dominating the news, giving you no trust in any of our regulators or anyone else. I mean, they need to put this thing to bed and start working together and not this nonsense. And even worse, as much as people are going to say, oh, we need to regulate them. And I actually think the CFTC has done a decent job, but the SEC still refuses to go before Congress and make statements. And that's one man's prerogative. He must have a strategy around that, but it is absolutely hurting everybody around him in different ways. But here's what the markets look like. This is a very red day. So this is a sell-off for sure. And we can see even crude oil, which started the day in the green, has given it all back. Now, this retail sales number is a little bit awkward. And in fairness, I kind of agree. The thing is, if you look at the November number over last year, it looks great. If you look at the November number over last month, it's horrible. It's horrible. And I'm going to try to increase the size. Man, one day I would love to go to the economic data people, and I would like to remind them that some of us as we get older can't see the same way those beautiful young eyes can see things. But this is basically the number. And the two numbers you actually care about, it would be so lovely if they would just keep these numbers with the actual numbers where the percentages are. Instead, they give you this number, which is the year-to-date increase in that item. And then they give you this monthly number, and the number that is the top line number reported on the advanced release, which is here. The US Census keeps this. Sorry, that's the October number because I was trying to do a comparison to figure out what the heck they were trying to say. Here, this is the number here for December 15th. It is the November number, so it will include Black Friday, and it's down 0.6, and you can kind of see the mix of it. Total down 0.6. They're showing down general merchandise. Let me just show you what I'm seeing so you can really make your own call. It is a very strange release. It is just strange. Let's go through it. Okay, retail and food services up 9.6% on the year. But if you look at this number and this number, it's up just a touch. So food is still expensive, duh, but let me just go through it. You can see down here, food and beverages, grocery stores, your grocery bill is up about 1%. Okay, so for whatever reason, the mix of this is because it's retail sale. I showed you in a couple days before, the motor vehicle sales does actually comprise the biggest spend that you'll see. And so it becomes the biggest part of this number. And you can see a decrease in auto sales. Now, this can come from sales price versus, which we did see in CPI. We did see a downtick in used car sales, 3.3%. And then new car sales were flat. So that's how you could absolutely see this number being correct be 126 to 117. Realize that used car sales are a smaller percentage of total car sales by quite a bit, but this will include November. It will not include December 1 through Christmas. So kind of keep that in mind. Also, the new car number is always delayed by a month. So they just forward the estimate using some sort of statistical method. So this potentially is for revision. We shall see. October, which was up 1.3, like way stronger than anyone expected, that was not revised downward. So that's part of what makes this all so odd, because it really, since last year's comps were kind of rough, because last year was a decent year for everybody. It's really weird. Now, if we compare to the beginning of the year, this is the 11th month total, percent change from 2011 or 2021. Sorry, I don't know what's wrong with me. You will see that all of these numbers, except for electronics and appliances, are up, right? So it will still feel like 9.6% inflation on the year. They're trying to say that on the month, that's not the case, but given I'm looking down this list, there's only a couple of places where it's not the case, the primary of which is motor vehicles. It's a little bit of a very awkward read, for lack of a better way. So let's go, you still have electronics even up for the first time, 6.8, 8.4. That hasn't been up in a long while, for lack of a better way to say it. Building materials is down, but that's kind of known. So the two interest rate sensitive cars and houses are down, but everything else, health and personal care is down a touch. And gas stores somehow are down over the month, but up 32%. So that's the gas price difference right there. Most likely, given how much gas has moved from October to November, and then now this month. So clothing somehow is up from 25 to 26, up 6 point. It's up a lot on from October to November. Okay, let me tell you why, given the categories that are up, this is very intriguing, is because those are usually your front runner categories, right? When you're busy buying gas and clothes, you're not busy buying, or sorry, when you're busy buying home related stuff, gas and food, really it's gas and food, you're not buying clothing unless you've got some disposable income. So all that this, I think, retail sales number does is make it very confusing how to think about the first quarter. And recall that we've only got a couple of companies that'll report from now until the end of the year. And then it's really the banks that come out first. And we'll see what Mark is doing and what the health of the nation is as far as banks go. Thus far, the only area of the financials I think that's really coughing it up hard is the insurance sector, because we just had one too many natural disasters. And that business is just a really tough business, but we'll save that for another time. So it's of course, crypto is coughing it up hard right now because of all this stuff with FTX. And that's part of the reason I chose to do Coinbase, which is a meme stock. This week is meme week. These aren't stocks that I'm necessarily in, but I do think that the way that they're reported on, whether I'm not saying other people are necessarily doing it right or wrong, but I don't think it's a fair way to do it. You got to actually give people the opportunity to learn these and make their own investment decisions. Always want to shout out Gurula. Money goes where it's treated best. And, we very much so believe that ultimately, even if, and of course you should, to the extent that you want, seek out advice, you got to make your own decisions on all this stuff. So past performance, not indicative of future returns. Now that I've said that, let's go into Coinbase. Okay. For my crypto people, you all know what Coinbase is. And then for my non-crypto people, you probably have heard of it. It is actually one of the few, let's call it US based, okay, for better, for worse, exchanges, though technically none of these exchanges are truly based anywhere. However, these guys probably look more US based than their closest competitor. But what is it exactly? Okay. Now, when people are shortcutting, which they absolutely should, because why not? They refer to Coinbase as an exchange, but it is actually, if we're going to get really technical, which we kind of need to in order to read these financial statements correctly, it is an exchange, a broker dealer, and a custodian. And so you're going to have to be, once you go through the financials of this, if you want to take a fundamental approach, you're going to have to feel comfortable that they're navigating all three of those businesses correctly. And there are some things that are really beneficial. And then there are some that are totally on the, yeah, buy it, it's awesome side. And then there are some really rough patches that require you to take a call, to make a call. And maybe you're making that call because you know the industry really well, you have a certain comfort level, or maybe you're just uncomfortable making that call. And so that's kind of how we want to talk about stories. We need to understand these three businesses. Now realize one of the things that makes it intriguing to even just know about this company right now is because the fifth largest, let's call it exchange, but that's not quite, again, the right word to call what FTX was. The fifth largest player, let's call it, in this crypto space has blown up. And so it really leaves a smaller number of players in a market that's been shrinking, in fairness, but still a smaller number of players in the space. And so Coinbase has some unique qualities because it's the second largest player. And I am going to show you, let's see, I did pull that off, I believe, just to try to help people out. Okay, this is what the exchange comparison looks like. This data just comes off of some website. You can pull it off. And I use trading volume. You can use number of coins. You can use number of markets that they have. So if you go to the exchange, the New York Stock Exchange may have 10,000 tickers representing 10,000 companies and their subsidiaries, probably a lot less because a lot of people have A shares and B shares, but whatever. It's making markets 10,000 plus or something like that. That number is wrong, guys. I'm just throwing it out there. Binance is making 1,662 markets, and Coinbase makes a little bit over a third of that. And then the number of coins that are represented, there you go. Okay, trading volume on Binance dwarfs everyone else. But oddly enough, if you took off Binance, you would think Coinbase dwarfs everybody else, right? So there are certain advantages to certain things happening. So if FTX was about fifth, then you would have seen about $200 million. Is that what it is? Trading volume. Yeah, I'm not 100% sure what this is representing. I'm pretty sure this is representing US dollars. And then Binance US, which is totally separated from Binance, the bigger organization that's global, has about half a $500 million on it. So that's what the organizations look like. I'm sorry, I just realized this isn't organized by trading volume. But I mean, nonetheless, you can see like 1, 2, 3, 4, the 4 players underneath Coinbase all have about $500 million that trades on it. There you go. Okay. So this is the crypto exchanges, what they look like and approximately what they're trading and what's going on. So you can see the size of volume, what have you. Now, Coinbase, everybody loves to hate on it. Okay. Fact is, Coinbase is mostly, well, let's talk about what it is. Okay. Coinbase, like I said, is an exchange. It's a broker dealer. These things are two different things. And then it's a custodian. So it has 3 different businesses, and they do actually show up very separately on the financial statements. Now, because they are a custodian and because they are also a broker dealer, the 2 things that I care about a whole lot, even more than being an exchange, I care about who's on the board, because when you have these 2 businesses, you better have good access to capital, and you better have a lot of smarts behind you, because you're going to, even if you have no regulation whatsoever, you're going to need to know where the line is, number one, and what it typically looks like to do it correctly. Okay. Now, FTX didn't have none of that. They have no board thus far, given what they told, the testimony from Mr. Ray. It sounds like even the half lies and misguided untruths that were told, even through that, any professional would have been very concerned with anything that was coming out of that young man's mouth. So there is that. But here we enter these 3 players, which make me feel a little bit better. Mark Andreessen, he's old school. Okay. Same thing with Fred Wilson. These guys have been around for a long time in private equity. They're not young men in the business of funding these businesses. Plus, they're not unaware of how exchanges or even these kind of semi-liquid asset classes work. You can look up their resumes and understand what's going on there. So these 2 make me feel slightly better. Mark Andreessen, however, his name is thrown about all in the crypto world, but he did have a full and amazing resume before crypto came to pass. So just realize that. Katie Hahn, I didn't know too much about her. She does have a fund that is specific to crypto, but what I enjoyed about her resume is that she did used to work for the DOJ. So this is a group of far more reliable, depending on how you feel about different things and what your level of comfort is. But it's kind of important that they have characters like this in the cast of Coinbase versus what I feel like we're starting to come out in the news flow and discovery. of FTX, for better or for worse. Look, it's going to be for worse, but man, that is quite the story. That is not the most fun thing, since so many people are getting hurt right on top of holiday time. All right, so this is kind of important. And far as I can tell, when I look through their financial statements, as a result, probably of this type of governance level and expectation, this mostly looks like a normal expected sort of situation that you'd expect from any exchange that's attached to a custodian. So let me just say right up front, biggest difference, I can see very clearly the three businesses separated from themselves more or less. Now, generally and personally, I'm not thrilled as a person in the marketplace that the exchange and the broker dealer and the custodian are all attached to themselves. I understand why they do it. And I do understand that from the perspective of being an investor in this, that's beautiful, because, you just have to make sure that you show compliance and do all that stuff. But you do have certain things there that I don't think are ideal. The other thing that you have to understand is, because of the nature of these three different types of businesses, there is, given what happened to FTX, every possibility that they're going to have to spend a bit more on regulation. At the same time, that's what the industry has wanted for a period of time, for a long period of time, and lobbied for. It's just whether or not the puck flows to where they were thinking it would flow to as relates to proper controls across the exchange. And then just to give it just a little bit more time on definitions, because I know everybody comes at my videos at different levels of their learning curve. The exchange is the thing that's going to make the markets. It should not be taking any capital risk. It should not be doing any offerings. If you're doing an offering of something that didn't exist before, that makes you a dealer. If you're trading on behalf of someone else, that makes you a broker. And if you're just the place that everybody meets up to do the exchanging, that makes you the exchange. Okay. In the US, maybe different other markets, you're a broker dealer or you're an exchange. Those things are separated from each other. The custodian is the place where, after all this is happening, you hold your assets. It's like a most boring bank in the world. If you want to see what it looks like on the boring side of life, very, very committed to cash flowing a certain way. You can look at Bank of New York, which is actually trying to ramp up as relates to crypto to become a custodian of crypto assets, but very specific assets. And then there's also a Northern Trust, who I would recommend if you want to study those two to understand what a custodian bank looks like. That's what it is. But these three are fully separated in the United States of America. So that's kind of the deal. All right, we look at Coinbase, we can see net revenues down so much, okay, more than half here, right? And the net revenue is down both for other and for net. This right here would have made me crazy if I didn't have a different breakout. But of course, we have to investigate the red flag that such an aggressive decline in revenue makes. And then here we have a huge uptick in tech and development, despite the fact that they did have variable costs with transaction expense. So thank God that's normal. And then sales and marketing down a touch. Would have liked to have seen that down more, but I understand when your sales are down, you got to market more than that. And then G&A is up a little bit. Don't love that. Okay. Now, tech and development, what is that? That's actually them needing to build security systems, because despite the fact the markets are so weird, security is not there, and they got to protect themselves, because they're, in bad markets, that's definitely when you get more hacked. Okay. That is something that's really relevant and important to understand. When markets are poor, if the one public company that we're seeing that I'm reviewing is showing you a huge increase in expenses, then you just have to understand for now that the nature of the business is such that when in bad times, when they least have the money to spend it and revenue to spend it, their costs go up. Okay. It's not great, but it is a thing. And so you want to be careful if this is an investment for you. You really need this asset class to improve tremendously for you to get any kind of scale on top of it. Okay. So then as a result, you got this huge hole burning through your pocket, because you got 1.1 in expenses because you can't get these two down, and you've got not as much revenue coming through. So you've got a loss. You're taking an L on the quarter. And if you look back, this is only 3 months on the quarter. So you're taking an L all the way down for the year as well. You end up with almost $10 in loss year to date, 250 more or less on the quarter. So right now, financially, this is a horrendous situation, but this is, number one, what I would consider a very early stage company. And number two, it's in probably the worst environment that you're ever going to see. So if it survives, God love them. And I would in many ways like to always keep an eye on them as a result of that. Okay. This balance sheet made me smile to the extent that it's actually divided out cleanly enough for me to understand that somebody cares enough to do it. Do you know what I'm saying? Because man, when I look at some financials of other financial companies that aren't quite there yet, I can't tell a damn thing's going on when I look at the balance sheet. So this is part of what I'm saying. We got a board that actually must be looking at the financials in a way that you would want to see them in this kind of market. We got cash and cash equivalents, that's down. Cash and cash equivalents is going to be very important for a custodian in particular. And then these two things, customer crypto assets, they smartly separated them. And then you can see it very clearly on the liability. So you got to match those. That's the cold storage business and a couple of the other types of businesses they have, because you'll notice that they're not doing as much trading as some others. I'll show you that in a bit. And then they have customer custodial cash completely separated out, and they show you clean as day that assets and liabilities match on that. Okay, this was not done at FTX, all right? First, we didn't have these beautiful financial statements, and Mr. Ray has already told the Senate, or excuse me, the House, that he didn't see any evidence of something like this. This is what it should look like when he's done. We should be able to see that all the assets that were given to be custodied so that people could then trade them on the next level up, the exchange, via the broker dealer, 3 things that are all one thing. We see them clean as day separated out so that we know we're not touching, in theory, customer assets, and that customer accounts are separated. That's what you look at. Okay, great. And then we'd even have USD coin completely separated out of US cash, okay, cash money. Okay, this is 5 in cash. And then this customer custodial cash better be cash money as well, because that's what it looks and seems to me like they are breaking out on this sheet. Okay, and then you got non-current assets here. And so current assets and current liabilities are just fine. Everything's cool. And the majority of this stuff, you got to strip out the pieces that I just showed you, and you'll end up with something that looks fine as far as that goes for a balance sheet, for lack of a better way to say it. It's not my favorite, because obviously you can kind of see that it's, it would be lovely if it was just a better environment for them. Okay, now let's go to the rest. So all of that looks more or less okay. At least there's not something like we're seeing at FTX that's obvious as daylight there. Now let's look at the revenue breakout. Okay, if they didn't do this, I would have been really crying this entire time, but instead they did, and that's wonderful. They do break out transaction revenue. Retail is the bigger portion of their transaction revenue, and you can see how much that's dropped off tremendously is the answer to that. This is their retail revenue, but I'm going to show you something else later on that's really intriguing, if you will. Okay, so we got almost 1/3 of the revenue that we had last year from retail. That's how tough this business is right now. Blockchain rewards, I'm going to come back to, and custodial fees totally separated out, since they've had about a haircut of half to their custody assets. This is what I'd expect, so that's fine. What blockchain rewards is there are a set of things that people do in blockchain. It's a little bit unique, where they help to they help support the protocol, for lack of a better way to say it. So, the thing with blockchain is you got to make sure that that blockchain piece is correct when it comes through, and you do a series of activities, and that activities nets you some kind of money. All right. In some cases, it nets you tokens. And that is the one thing that's a little bit confusing to me. If it wasn't for the balance sheet, I think I'd be more freaked out. But if I was like really trying to understand this, I would really try to understand what precisely is this blockchain rewards. Is it in crypto and you're paid in the native currency? Maybe you're doing it for Ethereum or something like that. Or is this number some else? And then you translate it into cash immediately, so we don't have any kind of issue on the balance sheet of not understanding what's going on there. So that would be the one thing I'd like to know a little bit more about. But in fairness, there are other people that probably know the answer, and I would encourage you to investigate that. Otherwise, this all looks okay. Subscription and service revenue, I have to look that up. I don't remember what that is exactly. And then you got interest income. That's coming from the fact that they're custodying the assets, and there is interest on anything that's not being actively traded but happens to be cash. Okay. Crypto asset sales revenue. This would have most likely been from any kind of ICOs that came out that they supported in some way. But as you can see, that's not been a big area of focus. And then corporate interest and other income. There you go. Now, this company has done a lot of different acquisitions. So as you look further down on the income statement, you'll see a lot of restructuring and various items in there. So realize that's in there too. Okay, I want to show you this asset mix because this is very interesting. They are really trying to follow the clean line, so to speak. And so most of what they claim, the most of what they do, and it's probably true, is Bitcoin and Ethereum. And that is the bulk of what they're saying is on the exchange or in cold storage. The cold storage that they support, there's more than one way people think about cold storage, so I'll just say it like it is. And then I wanted to really show you this, which I thought was a little bit strange, and that is the trading volume. So you can see that a lot of the, even though trading volume, this number right here, of course, down, painful, right? I get it. But this number right here, where the trading volume on the institutional business is far greater than that of the retail business, that is an interesting side note, given that the breakout for the revenue for retail is significantly higher than for institutional. If I was doing further investigation on this with a management, or if I was trying to get to the bottom of this, I need to understand why that is. Like, is it that you're just getting market makers coming in here? And if so, then what is the nature of this? What's the nature of that institutional? Is that like what typically the word institutional in finance would indicate a company or organization of meaningful size or a hedge fund? So then what the heck is that exactly? You know, and what then is the flow through all the way down? You can also see that given they're saying Ethereum and Bitcoin's our deal, you can see that most of the trading volume is those two assets. And then there's other crypto assets, and that's about a third of the business as well. And then you can see the revenue is mostly, however, almost a 45-55 split. So those other crypto assets that they're trading are far more profitable, are more like, you know, since this represents a bunch of coins and this is just two, it is interesting how the profit lays out that way. So the other half of their business is, and okay, so some of you are like, wait a second, 2 coins, that's the biggest thing in their business. Well, okay, you got to understand that these 2 coins have been confirmed as one type of token, which I will go through in a second. And the rest of it, in theory, is also a commodity token of some sort, anything but it's, you know, but yeah. All right, let's keep going. I'll show you what I mean by that. Okay, the most important disclosure for me, okay, there are a number of disclosures, but this one is the most important for me, is disclosure number 2. And there are 2 things in disclosure number 2 that I think anyone that wants to go into Coinbase should really try to understand for themselves, okay? And this is all of the chitter chatter that is going on almost to the side of what's going on with FTX. So FTX, blown up a blaze of glory, totally embezzlement. Now that Mr. Ray has made his testimony, anything that might have been said in advance is making it crystal clear that those half-truths were just that, half-truths and skirting the issue. But this side note, which is being dragged alongside it, is this, what is the role of the SEC? Now, the CFTC has been crystal clear on what it would like its role to be, and sometimes people confuse this. But there are in cryptocurrency, in fact, 3 categories of tokens. Some people divide it into 4. Listen, I ain't here to teach crypto today. I'm just here to tell you the 3 general categories, and let's just keep it at that. And if you want to learn more, know that there's some people that divide it into 4. But the first category of regulation that would fall to the SEC, all right, is crypto tokens that look a whole lot like it's actually a security. I'm gonna go through that in a second. And then the second aspect of SEC discussion that you could hear at FTX or hear in the disclosures is the idea of who's regulating this exchange. And specifically to the extent that you might be doing a security token, if you got a security token, you better be regulated as well, your exchange, by the SEC. That's really what it is. And that's why the 2 are together. Now, the security tokens individually, each one of these guys who the SEC has charged Coinbase with violating the securities situation. I mean, this is just a minor fine and discovery and cease and desist type of thing. I don't think this is dire or anything. This right here, they can't be trading that, okay? Now, the other big one that everybody's heard about is Ripple, XRP. And they were, of course, because XRP has been around for so long, trading XRP. Now they're not trading XRP for good reason, because right now the SEC is filing a lawsuit against Ripple. And so off XRP goes. And yeah, so that, and then if you are trading those, then they have to be registered, the coins, and also you got to be registered to be trading a security. And then everything has to be regulated under the SEC. Coinbase is probably willing to do that because they believe they can make money off of it being regulated, because there's way more institutional money than there is retail money. Love you guys. I know I'm oriented towards that, but that is what it is. Okay. But you know, if the institutional people come in here and force regulation and do all these great things, it probably protects the retail investor as well. Nonetheless, that's the deal with respect to disclosure 2. So you can read it. I highlighted some things in red here, but mostly you can pick out right at the top what it's saying about these particular tickers. I'm more than sure this is not an exhaustive list of all the unregistered, identified clearly as security tokens that exist. In fact, some would argue most tokens are actually security tokens with a different name on top of them. And then you can also read what they had to say about Ripple Labs, and the fact that some folks believe very strongly that that is a security token. And then the folks at Ripple who would then have to do a set of things that they don't feel like doing that's quite expensive feel differently. I'm not here to make a call on that. And then the exchange, you want to read that carefully and make sure you understand what the issue is. Now, I want to talk about the security token, because you're going to hear all these words thrown about. It's not very helpful, probably, because even for me, not even for me anyways, if you're like me, you had trouble with all the things that they're throwing at you. I'm gonna draw you 2 diagrams in my effort to try to help, but quite frankly, it took me a while. So, you know, this is me doing my best effort, and I hope you can benefit from it, and maybe a few more turns at the wheel and you'll understand it. But there are 3 approximate type of tokens. There's a security token, which I'll talk about. There's a utility token, which is being used as this gray area. Okay. And then there's a commodity token, and the commodity token is literally just unambiguously a token. So like right now, if you go into whatever game and you can't go anywhere else to sell that token, you know, you're just playing whatever it is, Candy Crush, you know, that definitely is a commodity token. It's not going to be a security token. Security token is the one that bothers people, because a security token for equities because it looks a whole lot like a stock. I don't know another way to say it. It just looks a whole lot like a stock. For a lot of security tokens, value is derived from either revenue or increasing the value of that asset. So it either looks like I'm increasing, I'm going to make money off of it like I would if I was a company, and then give you some stream of cash flows. In the case of equities, we're usually talking about net income. In the case of security coins, security tokens, we're usually talking about revenue. And then the taxation, very unclear at this point. Okay. And then, and that has to do with how precisely, and I'll show you an example of how you get paid in the security tokens versus in equities. And then the US way in which you behave at all times, in every single precise way that you report this, highly regulated. On the token side, not so much. Now, they call this thing the Howey test, and there's 4 questions for the Howey test, and they're all over the news. I'll let you look this up. Howey in the Hills is actually an hour and a quarter away from my house here if I drove straight over to it. But it had to do with this orange farm situation where essentially he was having people buy the land, but then immediately they would lease it back to him. And instead of him paying any kind of rent on the land, he would just give them a revenue share. And the SEC was like, dude, that is a security. You're just trying to avoid taxes, right? And so that was the end of that. So now I'm massively oversimplifying. So if you're a lawyer, I apologize in advance. If you feel a passion to write down the whole Howey test, I will probably put a link in the show notes just for that. Okay. But I think this actually shows a really good example that was explained to me a long time ago about how you want to think about I'm gonna make it so obvious that it should be security token. That's my intention. Okay. So let's say you issue a token. All right. And you have a bunch of film investors that are going to put money in the token. Right. And then you're going to, and in return, instead of giving them some kind of return, you're just going to give them a token in exchange. So the film investors look like they just bought a token. And so that's going to be taxed very differently if you didn't have this concept of security token, because that would be taxed the same way as if I went to the hobby shop and I got myself some baseball cards. Okay. On the other side of it, I got to pay artists. Well, the investors just gave me a bunch of cash. This film does not exist yet. That's a really important part of the Howie rule. This film does not exist yet. So I pay the artists either in cash money, if some of them are unwilling to take tokens, or if they're like a Steven Spielberg, they got all the money in the world, I give them tokens. All right. And then some of the artists who are just wealthy, they're like, give me the tokens. It's fine. Right. So then they're not going to pay tax on the tokens same way, because what is the token? It's just, or maybe they would pay tax if there's a value. But here's the thing, for ICOs at the initial coin offering, that has no value. And then until this thing has value, it has very low value. So there are people that would rather have the coin if they thought your film was going to be blockbuster. All right, great. So now this is money flowing through same way it would if you had equitized this film and raised capital like a normal human being. Okay, now the movie watcher is going to give you a bunch of money. And in some cases, you might have them do like, I'll buy 5 films for me all at once. And so you, the issuer of the token, you're taking that money too. Now that one, he may actually pay taxes on, depends, how you get it done. And on the other side of it, you're going to give him a token. See what I mean? All right. So now if you got enough moviegoers, this film's a blockbuster in and outside of the ecosystem. We call it the ecosystem, which I think they should just call it this closed economy and then the bigger economy, but whatever. The money, instead of giving it back to everybody, because everybody's wealthy in this example, you can just use the money to make another film. And even though the value is going up and up and up, not a darn person is paying taxes. That's why people are PO'd, if you will. And that's also, if the money loses if the film loses everything, then these poor guys, if they were paid in tokens, get nothing. And same. Anyways, this looks a whole lot like a very early stage, let's call it venture. But instead of doing it the normal way that is regulated, you're bypassing it. That's why people are like, yo, you're a security token. You can replace the word film with video game here. You can replace it with pretty much anything, but this is why people are upset at the SEC or otherwise. That's a security token situation. In contrast, and then I swear I'll keep this at least somewhat short, there's a utility token or commodity tokens tend to look more like this. This one I'm going to say is, you know what, this is actually even more of a commodity token. I get the two flipped a little bit, but this other form of token, you can almost swap it out with the word gold. Okay. And you're not going to have a problem. This is what Ledger X more or less was. I'm oversimplifying. Okay. Because I'm trying to make this somewhat digestible by someone on the internet. But essentially, I give you cash money. All right. Because I want to give money to some family that's in another country that isn't in the same currency as me and isn't in an obvious other currency like euro, where it's just so basic to try to switch it. So let's say I'm from Thailand, which is an amazing, beautiful, gorgeous place, or I have a bunch of Thai baht because I just got back from Thailand. And let's say my family is South African, awesome, right? And I want to get them cash and I want to give you Thai, I want to do it through Thai baht. Well, it turns out that the current old school system of SWIFT, et cetera, would typically have forced you to first take your Thai baht, switch it into US dollars or euro or some other kind of major currency, do a little swappy swap. And then you have to go back to the currency markets and take it from US dollars or euro and swap it back over into South African rand. So you got two-way transaction. And so what these types of tokens do, they solve a real world problem. There's going to be a bunch of banks all over the world. Some of them care about Thai baht and something else, right? And then there's a bunch of other banks all over the world and they care about South African ringgit. And sometimes if it's just as simple that we can do like this very easy trade, then hallelujah, awesome, right? But the ledger, this concept of a ledger, Ledger X, let's just pretend it was called, but it's not. Ledger X is a little bit more complicated than this, sits in the middle, takes in everything that everybody's trying to get to and translates it to this other token. Let's call it Maze token, because I know there is actually an X token, so I can't be calling it that. So let's call it Maze token. There's probably a Maze token too at this point. There's so many. All right. It translates every single thing to Maze token and then spits you back out the number that you deserve and the number that I need in Thai baht and the number that I need in rand. And then everything just hangs out in May tokens. Okay. And then they got to just kind of unwind the May tokens and reset the May tokens associated with the exchange rate, et cetera. So you don't have to do this two-way weird cross going on quite the same. Am I oversimplifying? Heck yeah, I am. Okay, heck yeah, I am. But I'm trying to keep it simple. But here, the token always stays inside the ecosystem, inside the environment that it was designed to do, which is just could it clear the ledger. That's pure blockchain technology and the power of it. Okay, it doesn't do this crazy thing where it's leaving your little happy place and going somewhere else. I mean, technically, where it's going is the custodian. Okay, so we go back to here, custodian. Okay. So it's not doing that. It's doing, it's just hanging out in here. But some clever people in this part of the mess at Ripple, some clever people might be like, you know what? I don't need South African. I don't need anything. If everything's being translated back to the token in here, May's token, I'd just rather buy May tokens, right? Because then I can translate to whatever currency I want. I'll just skip a half a step. Okay, so that's what's going on over here. I got a little answer key there as well, in case you're trying to follow along with me and I'm doing a poor job explaining, but that's the deal. And with that, I will stop share and take questions. That was a mouthful, I apologize. But just the Coinbase story, just to summarize really quickly, what I'm saying is that if you truly do understand all the risks, and some of you have been in this crypto game for a long time, so I'm not going to put it past you at all. And some of you are really passionate, you're going to do the research that's intended. If it gets through this period, it is the second largest player in the space. And there's so much additional story to Binance right this minute in time that it actually is a decent one to keep on the radar screen so you can get educated for the correct time to come in if you're new or if you're holding it so that you can just become educated as you go. It really absolutely does have to get through this period. And you can hear from the verbiage on the different house meetings and various interviews that there is going to be a little bit of extra checking, let's call it to be gentle, of every single exchange. Now, I think that Coinbase, from what it looks like thus far, at least has most of the initial ducks in a row, such that if Mr. Ray was the one going in there to try to find out what's going on, but you don't know until you look under the hood. It's like a used car that way, for lack of a better way to describe it. So those are kind of the major concerns, but if it gets past this period, it does have one less player, and probably a lot of the younger players are extremely weak. So that is what it is as well. All right, now I'm done. Go ahead, David.
Yeah,
any
very,
questions?
very good. Very informative. Thank you.
I'm glad it was helpful.
Have you compared Coinbase to Binance?
Okay, I have started to and tried, and it is not the easiest thing because I mean, I don't think it has the same documentation. I'm going to see if I can do a little bit more work. And I do want to show you this because this is actually a component I think that's kind of important to understand. So all of these companies, especially Binance, the reason there has to be a Binance US and the such is you want to realize that there is for almost every single coin, because of the nature of this dynamic. Hold on, let me go back to my little diagram to make it a little bit easier, okay? Because, and you'll hear these people call it an ecosystem, but what it is an economy, okay? And if you think about it, it's really all service economy related stuff. So I actually wish they wouldn't change the words, but would just grow the definitions that already exist to help people along. But essentially in this world, you can see that if there's a lot more moviegoers, well, you as a film investor are like loving it, right? Same thing with the artist is loving it. The whole motivation is to get more movie watchers. And heck, while we are making money, because maybe we've made 3 or 4 blockbusters, let's start selling popcorn. Let's start doing all kinds of stuff. You know me, I love my AMC or whatever. So shout out to these guys. There's a legit, wonderful way that even if you have to do all your SEC filings, that this is just beautiful, okay? We got to make sure there's no money laundering from these guys or these guys or these guys. That's really what the SEC is trying to make sure that happens here. And then we got to make sure everybody gets treated fairly. But that's why it's not necessarily the case that every single player out there is antagonistic to doing this the right way. Okay, now I want to show you this because this is Binance Labs. So every single one of these coins that is setting up in a certain way where they're going to probably have to be regulated, either is creating a separate entity that they can then do more to try to get more projects, they call it, in the ecosystem. So that's basically like they got funding because they made money off their first public venture, and then they're really just setting up VC funds. And in some cases, they're just flat out called VC funds. They're not even trying to pretend. Okay, so this is an element of the crypto world. But if you think about it, sometimes these people are given a combination of coins and cash. And depending on their circumstances, they may not even need the cash. It's all coins. But this is how some startups in the space get their money, and it's its own deal as well. And you know, these ICOs, when they come out, they're not regulated like a regular public offering would be, with all of the stuff in the memorandums that are required. Coinbase was a little different because they did go to through a more normal route. They're listed on NASDAQ, et cetera. So they're a little bit of a different animal, even though they did their own offering.
Do they have their own coin?
Yeah. Ooh, you got me. I don't know the answer to that off the top of my head.
Yeah, I mean, because like FTX, I think their downfall is they use their own coin, no intrinsic value, as collateral. And
that is the most important thing about Coinbase's balance sheet that made me happy and smiling, is because you can see very clearly what they're using. It's Bitcoin and Ethereum is at least 70% of the total capital that they're using,
cool.
right? That was the importance of seeing that breakout. And I'm glad to see it. And I think that's a testament to them having a little bit more structure on their board.
Okay.
Gray hairs, let me say it that way.
I think the most important part of an exchange are the spread, the market makers.
Yeah. You mean their competence or their experience, or what are you thinking?
No. I mean, when you go in to buy, the market makers are going to determine how much you pay or get or sell for, as far as the spread goes.
Yeah. And that's one of the criticisms people have of Coinbase versus other market makers. At the same time, I'd rather you do it slower and correctly than quick and not correctly. At least I know the market's there.
Yeah, I've heard that their spreads are pretty wide. So
super wide.
If it comes in, the revenue is going to come down, right?
If what comes in, if they get better spreads. If we get better liquidity in this marketplace, yeah.
Are they their own market maker, or is there an outside like New York?
Well, they're the exchange, the broker dealer, and the custodian. That's what makes it so crazy. With FTX, same thing. Yeah.
Then as that comes in, which it should, then the revenue should go down, unless there's a huge amount of volume increase.
I'd rather see this marketplace get healthier and have volumes increase that way.
Yeah. Okay. Cool. All right.
Yeah. I mean, that's the holy grail.
Part of the regulation will require that their spreads come in, or competition, whatever. I mean, that's a good thing.
Knock on wood that it actually is done. There's so much. These hearings are disturbing, to say the least. And then I do believe that most of the people that are coming up are less jargon, but I shouldn't get confused easily in any of these hearings ever. You know what I mean? I should only have one or two questions, but some of the things that I'm hearing, I'm like, that doesn't jive with this other thing you said. So now I need you to stop and explain it to me, which I thought I had enough gray hair, but I guess there's people that are smarter than me at all times. And I'm always aware of that. I'm still struggling here and there.
I get confused, as most people do, on the value of these coins. Now, you can apparently loan your coin out.
Yeah.
For a certain interest rate. I mean, would that establish a value?
No.
Okay.
The
so
thing
if I'm getting 10% on a coin, you can't back that up to, your coin's worth $10.
The problem is that the interest rates on borrowed coins is the equivalent of putting up your house. Do you know what I mean? But there's no house. With your house, I can live in your house. This is what Warren Buffett has been on and on about, right?
Yeah. So there is no house. There is no asset. Okay.
There is no asset. So now we got to really pray that there's another mechanism that is supporting that fact that the house exists. Not, you know what I mean? Because one side of it or the other side of it is going to combust. If the reason you can put up your house and we consider that an asset-backed security is because the house has value. Even in stock, the best you're ever going to get on a collateralized loan of your stock is 50% of the total value of the stock portfolio. And then a risk manager, that's assuming the risk manager went in and was like, yeah, these are not 100% will not go to zero. And here's a scenario analysis around where I think it could go in the next year. But like crypto, ain't nobody that can do any kind of meaningful scenario analysis on that. Give me a break. Okay. You know what I mean? This is crazy.
I'm reaching for straws. So
no. So the thing that actually could do it though, the thing that actually absolutely could do it though, is a real economy on top of the coin. So let me go back to this, because this actually was a point that took me a long time to truly start to appreciate the what and why. All of these projects, they're all a service economy on top of your coin, right? So like, if I'm using the house example, that's one thing. But if I'm using a different example, let's say you have an online business, right? And your business cash flows regularly and is always making money. Well, even if your business don't have any physical assets, I can actually lend you money at that point. That's kind of what all these different economies are. And if you go down, there's like 420, because of course this industry is weird. So they post 420 different projects. Now, some of these projects are probably a big fat zero, but some of them are legitimately things that use the Binance coin that you 100% know that people are happy to give you money for. So it might be something like, if it was on TikTok or something like that, and everybody is excited to buy that particular whatever it is version, and that thing is built actually on top of Binance coin, then that actually gives Binance value, because real money is coming in to purchase something, and Binance is then just the technology. The other thing to note too is that for a company that's as evolved as Binance, which I think takes a while to get up to studying, and even I'm not even going to pretend like I know it really well, but companies like that are going to have more than one coin. They're going to have a coin that really is the commodity that, that is just like Bitcoin, et cetera. It fits none of the Howey metrics. They call that the Howey rule metrics. And it's going to really look like money, right? It's going to look just like the Singapore dollar did in that episode where I described how the Singapore dollar got started. Then it's got others that are definitely 100% a security token. Do you know what I mean? And so that's a more evolved looking situation. It also is part of the reason why I think Binance is probably just fine relative and is not doing anything similar to what FTX is doing. Now they might be doing other stuff that's, let's call it special, because I don't want to take someone, I don't want to disparage someone that's built something so amazing either. But yeah, so Binance is definitively a very different company in that respect. They might be there, before this is all done, everybody's getting investigated a little bit. So we'll find out as we go.
Yeah, I just think the development of a market maker, and a market maker has to have inventory, right? And
exactly, yes.
and something that's volatile, you're not going to find any market makers, I don't think.
Well, okay, I got to tell you, that has always been a bothersome, troublesome thing, because from time to time, I'll just like try to listen to what are the kids talking about on the Reddit boards or wherever. And from time to time, I've been asked to speak about something just to kind of bounce ideas off and make sure that it actually makes sense. And one of the things that bothered me at one point was they were talking about, oh, we need to increase the number of transactions. And so here's some ways to increase the number of transactions, which would be the equivalent, because they're using fancy verbiage to say it. It would have been like, back in the day, I don't remember which scandal or which issue or rule was then created as a function of this, but on the trading floor, let's say you and I were like, it's a slow day. We got to make it look like there's a market here, and we just trade back and forth.
Yeah.
Yeah. So that's what some suggested papers that I had crossed my desk actually were suggesting. I'm like, no, honey, that does not create a liquid market. Do you know what I mean? So it's stuff like that, because the jargon is so crazy. And because some of these folks that are coming in at fairly high levels are just too young to know any better, it's stuff like that.
Yeah. Okay. So, it's a great idea, but until I see market makers, I'm not
true market makers, and then some regulation around it, right?
Exchange. Okay.
Yeah. And
okay, let's go to retail sales.
Oh God, retail sales. So much more fun actually talking about this. I'm just kidding. Go ahead, tell me. What are you taking on retail sales?
Well, you're saying clothing was up. So
right.
I'm thinking for Christmas, clothing is a big item, right?
They're all big items. They all kind of on the month. Apparel wasn't that bad last month either. It's really interesting. Apparel was so weak for parts of this year, and then it's come back pretty well. That was surprising to me.
Okay, and you mentioned gas being down. That could be, and the price of gas has come down dramatically.
Yes, it has. And that was, remember, this is through November, but even
I don't think that's a reflection of a weak economy.
That's correct.
Okay.
I'm with you. Yeah. It's a very weird number for November because because the November month has traditionally included Black Friday. And I mean, more than one of my girlfriends who is addicted to Black Friday was like, there was no one, May. There was no one relative to standing up in line forever and having difficulties. That was not my problem this quarter or this year.
Really?
Yeah. I think it's because sales started a lot earlier in October.
Oh, okay. Okay, great. Wonderful, May. Thank you. Very, very good show.
All right, take care. Good luck in these markets. It's so red. Bye.